Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
You know, you could call 2025 the year of the paradox for the stock market, right? Because despite all of it, the trade tensions, the inflation, the geopolitical surprises and shocks, you know, we're up double digits across the board here for the major indexes. What does 2026 hold? Seema Shah here in our studios, actually, which is very exciting. Chief Global Strategist at Principal Asset Management. Seema, always good to see you. Thanks for stopping by the studio.
So good to be here. Thank you.
Is 2026 going to be a year of paradoxes as well for this market, do you think?
Yeah, I think it will be in a slightly different way in that you have a fairly constructive economic backdrop. Consumers we think will be okay, not incredibly strong, but we think they'll be okay. They get help from the fiscal side, they get help from the monetary side. And yet, despite that constructive backdrop, investors are still going to have that niggling fear about AI, which is likely to persist.
I'm not sure if AI is going to continue to be the tailwind that it has been for the last several years. Now it seems like conversations that we're hearing from folks say, boy, I'm a little bit concerned that we've gotten too far over our skis, or it's run its course, or the best growth days are behind us. How do you guys think about that?
Yeah, I think the narrative has definitely shifted in the last 2 or 3 months. It really has gained a lot of momentum in that people are saying, okay, what else is there? They're not shying away from tech by any means, but they're not adding to exposure. They are trying to think where else to go, whether that's other sectors, other regions. So there's definitely that dynamic, which is starting to come through in a lot of conversations that we're having.
So what are you hearing from clients? I mean, where are they looking outside of sort of the obvious tech plays?
Yeah, so I think the key areas that we're speaking about is financials, which has already had a really good year. But with that constructive backdrop that continues to flow through into 2026, and also consumer discretionary. We're hearing more people talk about that, of course, but with the fiscal stimulus, the tax refunds that we're expecting to come through in Q1, that should give a bit of a boost, particularly after a period of some difficulty. And then beyond regions, beyond sectors, a lot of questions around regions. And that's been a really interesting discussion because Europe has been a really kind of underperformer, fairly boring. This year was a good year. Yep. But what we're seeing next year is that nobody's expecting it to be an incredible outperformer because growth is still fairly weak. But because it doesn't have as much exposure to technology, it's an opportunity for diversification with a fairly solid macro backdrop.
Is emerging markets something you guys think about?
Yeah, emerging markets, it's actually become a real favorite over the last 9 months.
Okay.
And that's something which is also carrying through. You have to be very particular, pick out which areas that you want to be in. But certainly the interest rate cycle is continuing in a lot of these nations. And interestingly, if you still really do believe in the tech narrative and you want to stay very much exposed to it, the thing about Asia is it has tech, but at a slightly cheaper valuation. So I think there's lots of opportunities outside of the US. And because this year you did actually see that global diversification paid off, that theme is now following through into 2026.
So when you talk EM doing well next year, possibly, and the financials continuing to do nicely, I think all that's predicated on a scenario where we're going to have lower rates for longer. What happens if we don't?
Well, I mean, it's been interesting because the last week or so, just the fact that the market lifted because of expectations turning for around the Fed cut in December tells us how important it still is. So when we're thinking about 2026, we have this constructive backdrop. We think that markets will do okay. And to your point, it is predicated on the idea that policymakers are able to still step in and provide that help wherever is necessary. Now, we don't think that the US requires a lot of rate cuts, but we do need to feel that the Fed is still willing to step in.
We had some very good earnings in third quarter. I think better than most people forecasted. Is the earnings outlook constructive for this market? Are the earnings growth, is it enough to push this market higher?
Yeah, absolutely. We do think that with that, for example, our economic growth forecast is for about 2%, 2.1% growth next year. When you have that kind of backdrop, then really earnings can do well. Now, again, it's not bangbusters, but it is something that you can see a bit of a broadening out, and it can continue to drive the market higher. Again, we're not looking at 25% gains, but we are thinking that this is still like a fairly decent year for 2026.
Do tariffs trip up finally trip up corporate America next year? Because, I mean, if you look at earnings this past quarter, they really didn't.
I don't think that tariffs are going to be that much of an issue. You know, we're expecting that the amount of uncertainty that we had this year is going to continue to fade into next year. There'll be pockets of volatility and concerns, but ultimately we have also realized that businesses are able to adapt. We don't think that they are willing to pass on too many price increases, so you could see some margin compression, but we're not expecting it to be very, very significant.
But geopolitics, I mean, it just seems like, you know, we still have, I don't know what's going on in the Mideast, but nothing seems to be resolved there. We've got ongoing negotiations between the Ukraine and Russia. We've got China. Who knows what's going to happen in that part of the world. The market seems to have discounted most of that throughout this year. Is that something we can expect to continue to think, or is that a black swan out there that
No, I believe that the market should continue to discount it. It was right in discounting it this year. Historically, whenever there've been geopolitical events, unless it fundamentally changes the inflation story, it is not something which has a sustained market impact. So, of course, we keep an eye on it, but it's not something that we're willing to try and position portfolios around.
And what about outside equities? I'm thinking, well, crypto, which we know volatility is sort of always the word of the day, but even things like private credit, where there have been some concerns and we've seen pockets of weakness. How do you look at that in 2026?
Yeah, we still have a constructive view of private credit. Of course, there've been, as you said, there's been pockets of weakness, and it has created a lot of concerns that there's something more sinister underlying it. But a lot of that to us has been idiosyncratic shocks. If we're looking at the consumer base, for example, and how this feeds through to private credit, we don't have that many concerns. We still think there's strength in that underlying story. It is losing a little bit of shine, I would say, but that means that investors need to be really careful about where they're looking at. So for us, the middle market direct lending is an area which you have a little bit more defensive nature, slightly more high quality within that space. So I think it's important that investors position appropriately within private credit. But importantly, going forward, these returns are going to be more and more difficult to come about in the same way that we've had over the last few years. So dipping into private markets is going to be increasingly important.
Not for nothing, but the high temperature today in Des Moines, Iowa is supposed to be 13 degrees. You looking forward to that?
And
dude, the low temperature in Wednesday is going to be -5.
So the thing is that in Des Moines, you don't need to step outside. You can go through the skywalks.
Okay, because for those who don't know, Principal Asset Management, great asset management business. They've been in the business forever. I've gone out there to Des Moines many times to see those folks. It's December. And it's chilly in Des Moines.
Yeah.
And so Seema, being the leader of, one of the senior folks at Principal Asset Management, she's got to go to Des Moines and see the folks there.
Black Friday thermal sales.
Yes, Black Friday thermal
You're
sales.
stocking up, Seema.
This is not London, folks. This is not the city of London. This is Des Moines, Iowa in December.
Makes it
Party
look like
people.
a heat wave here in New York City.
Exactly. Seema Shah, thank you so much for joining us. We appreciate it. On her way from London to Des Moines, Iowa, making a little stopover in New York City here. Seema Shah, Chief Global Strategist, Principal Asset Management. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
You know, Paul, we are going to have a new Fed chair in May. President Trump says he's decided on his pick. He hasn't announced who, but we know that Kevin Hassett, his chief economic advisor, seems to be at the top of that list. Want to dig into how that may impact market decisions and take a look at sort of the more global political landscape, if you will, with Henrietta Treyz, co-founder of Veda Partners. Henrietta, thanks so much for being with us. Let's just start with the Federal Reserve, the changes that are to come in the months ahead. How are you looking at that when you think about markets overall in 2026?
I think it's obviously the core question. And with so much uncertainty at the Fed, what I like about having a new Fed member, specifically if it's Kevin Hassett, is how that member is going to vote. There's not any confusion. And with such a disparate Fed, that's been something that's tricky for investors to really nail down. So you now will have two guaranteed locks on the voting basis of whether or not there should be cuts. The tricky part is the timing. As we get into May, the president is going to be staring down the 2026 midterm elections coming up in November, and all 435 members, except for the 22, I think, Republicans who are not running again, are going to be up for re-election, and they're going to have to sell the United States consumer on the idea that the economy is great, and so we should be cutting interest rates if we need to, or the job market is where we should be prioritizing our time, but simultaneously that we need a $2,000 tax rebate to offset the cost of the tariffs. So it's a really tricky dynamic to have that conversation at the same time. That's what I'd be worried about in terms of timing. But Kevin Hassett, I think, would get through the Senate without too much of a problem on the confirmation front, unless there's some unknown quantity we haven't learned about in the last decade of his time in the public space.
Henrietta, I know you're going to tell us that Congress is either on break now or they're about to go on break. But what's the to-do list for our Congress here looking forward?
Yeah, the to-do list is really going to be dominated by those ACA subsidies, which is where they actually have promised the Democratic conference that they will hold a vote this year. So in the 3-week work session, which equals out to about 12 days of legislative action for the whole month of December through the end of this year, they're going to have to hold some sort of vote on ACA subsidies. They also wanted to hold something that they were calling Russia Week. But as the president is negotiating deals with Russia and Ukraine separately, they'll probably not hold those votes. So mostly ACA subsidies, continued work on the appropriations bills to avoid a shutdown as we come back in early 2026.
And you throw into the mix Venezuela now, Henrietta, right? President Trump said that airlines should consider the airspace above and around Venezuela to be closed as his administration continues to threaten more aggressive steps against President Maduro's government. We see oil reacting to this news. Oil is higher today. No big surprise there. But how do you see that possibly playing out?
Yeah, the thing about going into foreign policy issues is that members, especially on the Senate side, on Armed Services and Foreign Affairs Committee, they take their jobs incredibly seriously. They're going to want to hold hearings. They're going to want to talk about the potential commands that Hegseth delivered to kill 2 remaining survivors. They take that incredibly seriously. You've seen it in the backlash that came out this weekend in public comments from Republican members as well. So that's going to eat up a lot of airtime for probably weeks, if not months, well into 2026, I would expect as well. And again, it just takes away those 12 legislative days of action that they actually have in the month of December to tackle government funding and ACA subsidies. That's going to be where all their concentration and oxygen is. And they love those moments. They really want to have hearings about it, oversight. That's very serious for those members.
I'm heading to Aruba next month, and that's like right off the coast of Venezuela. So I'm paying attention here.
I bet you are,
I mean,
my
I'd be
friend.
sitting on the beach watching a Navy ship. I don't know what's going on. Hey, Henrietta, can you tell me what an auto pen is? And do I need to care about this?
I wouldn't. They're used all the time. The president signs a million different things a day, and the auto pen is a time-tested, used in every single administration way to get signatures out the door from the president. Obviously, President Trump has a bone to pick with the auto pen, but I would be shocked if he hasn't also been a profligate user of it, particularly in his first term.
But he actually made Biden's portrait in the White House a picture of the auto pen, his auto signature. Yes, so it's not Biden's face.
Okay.
It is his auto pen signature hanging in the White House.
Nice job. So
Yeah, the maturity is astounding.
Henrietta, we had the governorships in Virginia and New Jersey several weeks ago, which were a positive for the Democrats. And that kind of caused the Trump administration to, I guess, focus a little bit more on affordability. Is that still a theme for this White House, or has it moved on?
You know, it has to be. It has to be because the president is very closely watching the midterms. If the Democrats control the House, which is very likely to be the outcome of the next election, then he has a serious problem in terms of real oversight, subpoenas, et cetera, that will occupy the final 2 years of his term in office. So winning the 2026 midterms has been a huge focus for the president, which is why there's been the redistricting efforts across Indiana and Texas and everywhere else. And the problem for the Trump administration is the top issues for the American voters are not the Russia-Ukraine war, Israel-Gaza, Venezuela. None of the foreign policy stuff is of interest to U.S. voters. They're famously not following international politics. What they do care about is inflation and prices. Those are the top 2 issues facing consumers in all polls that are taken, along with the economy and the job market. So whether the president wants to focus on those issues or not, it's mandatory because that's what the voters are going to turn out to either support the Republican ideas or reject them. in November. So those gubernatorial races where Democrats picked up 12, 13 points in New Jersey and Virginia, where Republicans were really hoping to make gains and keep it to like 5-point wins, showed that that's not going to be an option as long as affordability remains the number one problem. So whether they want to or not, it has to be the core focus of the Republican conference and the administration. ACA subsidies play a role in that. Prices, inflation, all those pieces, tariffs are hugely important to the U.S. consumer and voter.
And of course, the job market, which you mentioned just a second ago. So we know that this administration vows strict immigration curbs, especially after that National Guard member, or two of them, dying after being ambushed near the White House last week. So how, if they continue with that strategy, which it seems like they're going to throughout the Trump administration, how do you see that impacting the job market specifically?
Yeah, the job market is hugely problematic, mostly because people don't feel comfortable. If you look at the University of Michigan consumer confidence data and whether they think like they have an opportunity to go get a new job, if they're going to get a pay increase, everybody's sort of staying put. But on top of that, you're seeing major corporations fire folks. I think it's 86,000 jobs in the manufacturing sector have been lost since Liberation Day. So there's this sense amongst the U.S. consumer that there's not another job out there and they need to stay put. That creates the uncertainty and the lack of wage growth. And again, that compounding issue of focused on prices and affordability that keeps all that front and center. On the immigration front, from my seat, the response function that you see in the voter polls is that they think the president has, quote, gone too far on immigration. And a lot of that is to do with the National Guards being sent to cities around America. They're coming to New Orleans this week. So that's an issue that the American voter sees and has decided that they don't like, even though they just voted for it in 2024. So that's going to be an area of overreach and that sort of pendulum swing that we're very used to in politics. You elect one party to do sweeping change in 1 year, and then as soon as they start doing the sweeping change, you decide you don't like it. That's the phase that we're in right now from the voter base.
Well, Henrietta, you provide investors with economic policy analysis. You've been doing it for years. You're going to have a very busy 2026. Henrietta Treyz, co-founder of Veda Partners.
Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Brian Levitt, Chief Global Market Strategist for Invesco, joins us here in our New York City studios. Brian, what is the 2026 call for you guys this year?
The 2026 call for us is that we will continue to see resilience in the global economy, actually even a pickup in global economic activity, given some fiscal support, policy easing in the United States. And that should continue to drive markets higher. We're looking for some type of rebalancing, sector rotation even within growth, but also to broadening out to other parts of the markets, specifically non-U.S. markets as the Federal Reserve lowers interest rates.
Okay, so what non-U.S. markets do you particularly like in 2026?
Typically, the developing markets of the world perform best in an environment when the Fed is easing and when the dollar is either flat to weakening. And so, that's why so much of this is on the Fed right now and why the focus is so significant on the Fed, because a lot of these calls are predicated on the fact that we will get easier monetary policy, a steepening of the yield curve, and no additional upward pressure on the U.S. dollar. And so in that backdrop, a number of developing economies, the central banks of developing economies, can lower interest rates and produce better economic outcomes.
In the U.S. here, it's been 2025 has been, I guess the theme has been AI and what it means for everybody. Do we still play that in 2026? Do we have a different playbook for AI in 2026?
Well, the nice thing about it, I think you continue to play it, but the nice thing is you can diversify some of your portfolio into other parts of the market if you get the policy easing and a pickup in activity. And so the challenge for the last couple of years has been, it's really been an environment where economic activity has been basically flat. There's been no real catalyst to unlock value in the U.S. markets. And so in a slow growth environment, you buy growth. I don't think we give up on that trade, but if you get the pickup in economic activity that we are expecting, you should be able to participate with a better valuation portfolio. That would mean moving into mid-cap strategies, moving into more value-oriented parts of the market.
And what about private credit, which we know has been exploding? You see opportunity there in the new year?
Yeah, we do. And I don't think that, the concerns that people have with a couple of high profile names, questions about whether that was systemic. And, I went on record saying idiosyncratic. So far, so good. I don't think that the private markets are impaired as many people believe. And you're still looking at yields of, 7-8%,
exactly.
which is, probably a reasonable equity-like return, maybe even better than equity-like return over the next decade. And the fundamentals still appear to be sound.
2025, if you look across fixed income, I do that with the INGO function on the Bloomberg terminal that gives you a good read about how fixed income is performing globally. The U.S. fixed income market, mid to high single-digit returns this year. It's been a good year, and some of the best returns have been if you've been taking credit risk, high yield, leveraged loans. How do you think about the credit profile out there?
Well, the first thing I would say about just the returns in general in the aggregate, how many people were trying to warn us at some point this year about the sustainability of the U.S. fiscal situation? And we heard things like rates are going to keep going well above 5-6%. I never bought into that. In essence, what investors were trying to tell us was that the U.S. Treasury was going to trade like a credit. No, the U.S. Treasury is going to trade based on the nominal growth potential of the country. That's precisely what it did, moving down from 480 in mid-January to basically 4% today. Now, the credit markets, what ends up happening mid-cycle is that investors become very concerned about spreads, but spreads can remain very tight so long as the economy doesn't roll over or inflation expectations break out, and neither of those things happen. So, yeah, you should expect coupon-like returns in investment grade, in high yield, unless you believe we're heading towards a recession. And if we were heading towards a recession, I think it would look like a much different backdrop, not the least of which the Fed would probably be looking to tighten policy, and the bankers would probably be tightening lending standards, neither of which is happening right now.
Are you reading any tea leaves in what's happening in crypto? We've got Bitcoin now below 86,000. It was at 126,000 just a couple months ago, not even. What do you do with Bitcoin in particular in the new year?
It seems to me that it's been very much predicated on expectations of the Fed, which makes today seem like a little bit of a surprise compared to where we have been. If you look at when Jerome Powell first indicated that there might be some differing of views at the FOMC, that's when you started to see things like crypto sell off. You started to see non-profitable tech sell off. So that was all part of the same trade. I've got to be honest, I'm not the world's foremost crypto expert, but I assumed as there was greater clarity from where we were going with the Federal Reserve, as December got priced back in for a rate cut, I didn't expect this morning's action in crypto. So clearly there's still some...
is there just contagion selling? Is it a little
there's
FOMO?
some leverage in those markets, contagion selling. It has moved pretty far below its 50-day moving average right now, where the S&P 500 does not. I don't view it necessarily as a harbinger of where the stock market is going, but certainly interesting to watch today. Intriguing, not something I would have expected. I did not expect to wake up this morning and see crypto down 5%.
All right, you're a Michigan man in good standing after 4 years winning against Ohio State.
Up, are you? Tom's not here.
Ohio State University.
I expect this from Tom, not from you, Paul.
What was your takeaway from this Saturday? The Ohio State University and your Michigan.
Michigan could not stop the run. And, you had a 12-minute drive, Ohio State just rolling them. I think 16 of 18 plays were running. Michigan couldn't stop the run. They couldn't get anything going on offense. They'll be back. Yep. Right. These things have tended to be a little bit cyclical. Ohio State's got a very good team this year. They've got a number of first-round picks heading towards the NFL. We'll be back. Go Blue.
And it's crazy. If the Ohio State coach did not win this game and he won the national championship, he still would be at risk.
Remarkable, right?
Unbelievable. Because if you can't beat Michigan, you can't keep
as he should have been.
Yeah, exactly. That's how it works. Brian Levitt, Chief Global Market Strategist for Invesco. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It is time for newspapers and Lisa Mateo. Lisa, what do you have for us?
All right, so I want to talk about DNA test kits, right? I'm not sure if you guys have done that. I know my sisters have tried it. You know, the 23andMe.
I did it.
You
I did the 23andMe. Yeah.
You did. See, that's the one they did too.
Yeah.
It's really popular. But here's the thing. It's now causing issues for families that are handling estates because they have surprise heirs who are now looking for their cut of the inheritance.
It was only a matter of time.
Away. Yes. So the Wall Street Journal actually had, this is an interesting take on it. States are now reconsidering laws because a will or a trust, it doesn't necessarily prevent surprise relatives from making a claim. And there's phrases in wills sometimes like "to my descendants," so that can leave out room for like these unexpected.
Open.
Yes, it does. So I mean, the rules differ from state to state, so it depends on what state you are. But lawyers are saying what you need to do is you need to create estate plans that account for potential surprise heirs because it's happening more and more. Okay. I can't believe it.
Can you believe you need to add a line to your wills and trusts?
Now, did you have any surprises in your 23andMe experience?
No surprises. It sort of just confirmed what I thought. But it was kind of neat. It was fun.
Yes. Okay. Good.
No surprise anything out there. I'm just putting that out there. Nothing surprising.
You're not going to claim anybody's inheritance. Okay. Did you guys go to the movies over the weekend? No?
Yes, I did.
You did? Okay. Did you see the Zootopia 2?
I did not. And I saw this story that I saw Wicked.
Oh, you did? Okay.
Which I really enjoyed.
Okay, good. And
I'm surprised it was not number one because I know what you're going to tell us.
Yes. Which I was surprised too because I was like, Wicked is huge and it's been huge.
Yeah.
But it's now Walt Disney. They are front and center. Zootopia 2. It's a sequel to the film that was back in 2016. So it's been a while since this came out. 156 million in North American box office over Thanksgiving. 556 million worldwide. Disney said it's the biggest animated opening for all time in China. That excludes like the local films. That's huge.
That's the biggest part.
Yeah, that's really
for
big.
global Hollywood because China's been kind of closed off after becoming the second biggest movie theater in the world after North America. It kind of slowed down over the last 6, 7, 8 years, but I think it's opening up a little bit more. And
so that's a good sign
for Hollywood.
Okay. Good. And it's good news for theaters, right? Because it's been kind of slow before Wicked came out. And it kind of sets the stage too for the next Disney movie, which is Avatar. It's coming December 19th. So they're kind of setting the stage for a little bit. But I hope to go see it. I like the first one. It was a very cute movie.
This has been a surprise, I think, for Disney. They thought it was going to be big. But not this big.
But to unseat Wicked after just one weekend, that's was surprising to me. But go Zootopia.
Yes. Okay, so this one, there was a big ultra marathon in DC over the weekend, but it might not be the one that you've heard of. It's the Taco Bell DC 50K. Nice. Okay, so here's what you have to do. 31 miles of running, but you have to stop and eat at 9 different Taco Bells along the way. Okay, each location you have to purchase and eat an item. Drinks don't count as a purchase, and the race rules say that yes, vomiting is discouraged but allowed.
Oh gosh!
But also no Pepto-Bismol, no alcohol. You're not allowed to take any Pepsid. You can't do anything like that before the race, and it gets tougher as you go on because they start adding on. Like at this, by this time you hit this chain, you have to eat this many chalupas or something like that. So they really push it. You have to hand in a receipt when you cross the finish line to show that you had, all the greasy
Taco
food.
Bell event?
Yes.
This is a Taco Bell event. Nice.
You have to complete it in 11 hours at least. That's the cutoff. Okay. But
and people did this.
It's something new. It's like ultra marathons is like this whole big, craze.
I think you need an iron stomach for something like that.
I would not want. I would not even attempt it.
Especially our clean eater, Lisa Mateo. I cannot see you doing that.
I mean, granted, you run off the calories, but still, it can't be good.
No, I'm going to pass on that running experience.
All right, the newspapers, Lisa Mateo, there you go, the highlight of the day.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.